Trade Genius.
Hey guys, welcome to another edition of the Trade Genius podcast. I'm Philip. Bob has the day off. So in this episode, what I wanted to do was show you guys how I take a look at inflation, where I measure it from as to how we got to where we are today with this major inflation problem that we're dealing with, and then look at what really has protected us during that time. What was the best performing asset in terms of this inflation, or really the driver of this inflation? So without further ado, let's dive into the charts. Okay guys, so what we have here is the Fed's balance sheet. You're looking at a weekly chart of the Fed's balance sheet. Now, if you want to look at this on your own charts in TradingView, the symbol is going to be WALCL. All right, that'll give you the Fed's balance sheet. So here's the Fed's balance sheet, and I really want to look at things from the start of where they really ramped up the balance sheet and expanded it, because I really believe this is the driver of our inflation problem that we have. So you have to go all the way back to 2008. So I'm going to just make comparisons starting from this point in time. If some of the comparisons to the assets or commodities we're looking at didn't exist back then we'll just start from when they were introduced into the market. So if you look at the Fed's balance sheet, really what we're looking at is an expansion of 842% of the Fed's balance sheet back from this 08 to where we currently are now. So before the great financial crisis of 2008, the balance sheet was under $1 trillion. Currently, it's well over $8 trillion and topped out just under $9 trillion. And so has come off a little bit. But basically, from the great financial crisis to our current point in time, we're up 842%. So this is what you want to outperform, the Fed's balance sheet expansion. So how does that look compared to some other things that we deal with in the market? Well, first, let's look at the S&P 500. All right, so the S&P 500, if we measure it, it's really gone pretty much nowhere in terms of the Fed's balance sheet expansion. So we're looking at it in terms of price appreciation against the expanding Fed balance sheet. So we're just taking, in this case, we're just taking the SPX and dividing that into the Fed's balance sheet, right? So we get that ratio. And if you look here, the number is 17%. All right. So if you were invested in just the stock market broadly, you're only outperforming the Fed's balance sheet by 17%. Not much. All right, let's take a look at Amazon. If you invested in Amazon at the bottom of the great financial crisis when this all started to expand, and you go out to now where we're at, you would be up 1,088%. Not bad, outperforming the inflation rate there. If you look at Apple, Apple's up 1,089%, so similar performance. What about Google? Google's up 220%. Not so hot. Not so hot with Google. Let's look at Tesla, right? Favorite high flyer of the market. That's up 4,430% compared to the Fed balance sheet expansion. That's pretty good. That's pretty good. All right, let's take a look at gold. How did gold do? Gold actually is down 47%. They're stealing from you. If you're holding gold, they're stealing from you, right? That's this hidden theft that's going on. What about oil, crude oil? That's down minus 40% in terms of the Fed's expanding balance sheet, right? Pretty interesting, right? This is how you can tell what's really going on. And it's pretty, when you start looking at it in these terms, it's very eye-opening. What about BTC? Now, BTC is basically up 291,485%. All right, so far and away the best performing hedge against the Fed's expanding balance sheet. And the problem is the Fed's going to keep expanding the balance sheet. Sure, we're going to go through periods of contraction, but at the end of the day, they've let the genie out of the bottle, right? And what's going to start being an issue is going to be the bond market. And once you start losing control of the bond market, they're going to institute yield curve control. That's what we saw in Japan, and that's why Japan's currency is taking a hit. And that's why we say that, you know, the dollar, it might be the best performing bad asset because it's a fiat currency in the long haul. It's still going to inflate. So really it's key to be hedged against this inflation. I think this is a pretty eye-opening exercise for you guys to see what really performs against an expanding balance sheet. of the Fed. And I hope that you guys can take this information and prepare yourselves, because it's not going away, and it's going to continue to try and erode your wealth through this stealth theft of this money printing and this Fed balance sheet expansion. So anyway, there's some food for thought for today's video. Tomorrow we're going to dive into more crypto. We're going to take a look at the charts in Bitcoin and other cryptos. So don't forget to give me your requests down below in the comments for different tokens that you want me to take a look at. And don't miss tomorrow's episode either, because we're going to dive into a little bit more on Bitcoin as far as its supply and why, even at these prices, you really want to start allocating to your portfolio, because this has a long way to go to the upside. Tomorrow's episode will be very eye-opening in that regard. All right, guys, thanks again for watching. Please hit like and subscribe. Really helps out our channel. And I'll be back with Bob tomorrow for another episode. Take care.
Trade Genius.